So I think it's safe to say that the way you've been taught to invest your money has defied everything that you already told me that you wanted from your money, did it not? Wasn't secured in the form of what we're talking about. Probably didn't have the ROIs, or at least the consistent and persistent ROI that you wanted. Maybe the 10X, but you notice I didn't circle that. Maybe the legacy, maybe the freedom. I guess we could kind of say Wall Street did some, but when we broke it down and we peeled the onion one more time, and we looked at what a bank does every single day with their money, Wall Street came up way short. It's their terms. There's no security and there's no protection. So why in the world do we put money in Wall Street? What's up, everybody? It's Chris and Steven. We're going live with Wealth Webinar, and today we're talking private money. We're talking private money, hard money. We're talking being your own bank, you being the bank and being a lender. But you know what? This isn't just for you lenders out there or wannabe lenders. This is also for the borrowers. We're going to cover two sides of the coin. We're going to cover what it takes to be a private lender, how you get started, what you need to know, and we're going to talk about being a borrower. How do you be a good borrower? Literally, I wrote a book on all of this, and every one of you can get this book. You can just go on my website, chrisnaugle.com. You can get a copy of it, and it's free. You just pay the shipping to your house or get the ebook, and that's totally free. If you guys like audiobooks, we also have it on an audiobook. But we're literally going to cover the solutions for finding money, where to go, and what to do. So that's the most important thing. Steven, would you like to say anything before we kick this off?
Yeah, no, I mean, it's a more important subject than ever before. I mean, the last decade, we've had a lot of free money out there, very cheap money. It flows, it's available, anybody can access it. And as we're tightening down right now and restricting the economy, and rates are rising and banks are tightening up and everything that's going on, just money is becoming tighter and tighter and harder to access and get loans. And so the timing of this right now is absolutely perfect. If you're somebody that is looking to borrow money, to do more deals, to get into real estate investing, to be an active investor. And on the flip side of that, with the volatility in the markets, and we're facing a recession and possible depressions and everything else that we got going on, just a mayhem in this country right now. You know, on the lender side of things, the timing could not be more perfect to be able to get your money into consistent, predictable deals where you get nice, solid returns. So whether you're on the borrower or lender, or whatever your situation is you're on right now, today's gonna be very, very relevant for you, and the timing is perfect.
I couldn't agree more. I'm just putting the link for the book. A lot of people are asking for the link. So there's the one on my website, or you can go to Amazon and get the audio book. This is what it'll look like when you go to the website right there. Just boom, private money guide. So you get your copy today, get the audio book here. You can get the audio book for free, like I said. So if you guys want to grab it, there is how you do it. chrisnaugle.com, money guide. Kind of like what Steven said. I mean, I cannot think of a better time in history to learn what we're teaching you today and what we teach every single day in terms of taking back control of your money. There's so many things. I mean, gosh, we do What the F Happens every Wednesday morning, and a lot of you join us for that. And we never, ever have to even think. We used to kind of script out everything we were going to talk about. Now it just doesn't matter. You open up any news channel or any, it doesn't matter where you go. There's so much going on out there, from the markets going down to crypto exchanges going bankrupt to scandal after scandal, Ponzi after Ponzi. Just there's so much mess. But you know what? That all makes sense logically. We've been in the longest bull run in history. We got so used to just good times that literally we have created an entire generation of people that have never seen weak or hard times. There was a book that the late Stefan Arnio wrote, Hard Times Create Strong Men. It talks a lot about this, when in really good economic times, I mean, longer than 10 years, but we'll just say the last 10 years, we've experienced nothing but a bull market. Maybe some little blips in there, maybe some little things, but literally nothing but a bull market. Your real estate's done nothing but gone up. Your stocks and your bonds and everything that you've bought has just gone up. And then as of recently, heck, you even made money on buying cars. I mean, come on. When else in history have you ever been able to buy a car and then turn around and sell it for more money, even if it was a brand new car? Never. It was the craziest times ever, all fueled largely in part by the Fed. Okay, funded by a partner called the Fed. That's right. They printed a whole bunch of money. The government then dispersed that money to us, and they did it at such a level that it created massive inflation. But now all those times are coming to a screeching halt. We're at the end of a cycle, a big cycle. We're at the end of the long-term debt cycle and the end of a short-term debt cycle. Oh, and at the end of a technology cycle. So you can just say we're cycled out. And the only place this can go is down. So one of the most important things to understand is when this goes down, this is when you want to be the bank. I mean, we don't have to go back to 2014 when I was sitting in that seminar when Greg Hurling got on that stage. And at the end, he said, the ultimate in real estate is being the bank. We should all know by now that the banks make the money, right? And being the bank just makes sense. But the problem with that is so many people, when we talk about private money club, or we talk about lending or being the bank, so many people are like, well, I don't know how to do that. Well, that's what today's for, literally to show you how to do that. And we've got for our MSTV members and our private money club members, tomorrow night, we're doing an entire session, a demo. Okay, we're literally going to walk you through step by step on what it takes, how to do it, it doesn't matter what side you're on. You might be somebody that wants to borrow money for the real estate deals that are starting to lose value. I was just on a podcast with a guy in Salt Lake City, and he was saying like they're seeing 30% drops in real estate values in Salt Lake, which makes sense because real estate values in Salt Lake went way up, which means they got to come way down. I mean, it's what goes up must come down, and that's what you're seeing. But having access to capital, having access to private money, which is in my eyes, and Stephen, you can comment, the best money you can get, because that money is tied to a relationship that will pay dividends for maybe the rest of your life. When you build a relationship with a bank, do they really care about you? Maybe a community bank a little bit, but other than that, no. Banks don't care about you. You're a number. You're a profit center. They want you to give them your money, and they're going to pay you a ridiculously low interest rate. Even as the Fed raises interest rates, your bank account hasn't gone up hardly at all. Funny how that works. But banks don't care about you. They just want to use your money to make your money go to work for them instead of it working for you. And you got to change that. So if you're somebody that's got money or somebody that needs money, this is a unique time. Maybe and hopefully the last time in your lifetime that you have to deal with this kind of an economic cycle. And I can tell you the good news is the long-term debt cycles every 50 to 75 years. So for most of us, myself included and Stephen included, we won't be around to see the next one, but our kids will, their kids will. So we might as well learn today what they will need to know tomorrow. That makes sense? Because it isn't just about us. If you really study those 6 laws of wealth that we put together here, which was basically just taking the book, The Richest Man in Babylon, taking the rules of gold and bringing them to modern day time. I did this podcast where I do the 6 laws of wealth, and I get so many haters saying, oh, you read the book of Babylon. I'm like, yeah, I did. I read it about 7 times, and that's where these laws come from. They're just modern day versions of what was written back in the 30s about Babylon. But the 6th law of wealth says you must create a legacy. So if you go through your entire life and the only thing you ever really focus and care on is you and your wealth and what you're doing, shame on you, because like it's not just about us. Any of you that have children, like it's about them. So we need to learn today and pass on that knowledge of what we learned today to our children so that tomorrow they know how to change their financial futures, their financial destiny. And you know, somebody said to me this morning, they sent me this long, nasty message on one of my posts, and they said, money's the root of all evil. You know, I don't go about my life wanting and needing more money. And my comment to them was, well, good. You know, God will provide for you. But, you know, outside of that, money's just the tool. I don't know why you're making it something that it's not, because it really is. And I don't know about any of you, but I've been on both sides of the fence. I've been on the side of the fence where I haven't had any money, where I've had to struggle and scrape around and borrow and beg and plead. And then I've been on the side where I have a decent amount of money, where I don't have to do all those things. I just get to create. And I tell you, every second of every day, there's not one time that I ever want to go back to that time when I was struggling. Not one. And if any of you do, then today's training just isn't going to be for you. So today's training is for those of you that understand money's a tool. Okay, it's all it is. And I don't care what money is to you. I don't care if it's gold. I don't care if it's the paper money that we use to buy goods and services in this country. I don't care if money to you is digital currency. And in the future, it very well might be digital currency. It doesn't matter. It's just a means of exchange. And we need to understand how to use money. Because if it's just a tool, shouldn't we learn how to use the tool? Here's the problem. Please tell me anywhere you can go. You go to any single elementary school, any single high school, and please tell me a college that teaches people how to make money work for them. Just one. You're gonna have a really hard time. They don't teach it. They don't want you to know it. Because why would they want you to know how to make your money work for you when the bank, so that's what you're supposed to do, put the money in the bank. Oh, or Wall Street, you know, you're supposed to put the money in Wall Street. That's what they want, because they can control the narrative there. But you need to start controlling your narrative. And it really does come down to the single fundamental thing that we teach every day, is it's time for you to take back control of your money. It's time for you to start mimicking what the banks do, because they are pretty smart with money. You got to give it to them. They know how to make it work. So if we want to really educate ourselves on how to be the bank and how to take control, well, then just look at what a bank does every day. They have convinced us to make deposits in the bank. The bank then takes our deposit money and then combines it with other people and then lends that money out, and they make a spread. They pay us 1 or less and they charge 5 up. Not a difficult thing. And then they have a back office that tracks all the loans and makes sure that everybody's paying. And if somebody stops paying, they have penalties. And if somebody continues to stop paying, then it goes to collection. You get the drift. And they've also learned how to underwrite deals. So they've hired underwriters. Each and every single one of you on here can be an underwriter. And I'll show you software that will allow you to be an underwriter very simply. I mean, the first software you need is read a book, learn. Whatever it is you do in your life, I don't care for a profession, but none of you knew how to do that before you learned. You didn't know how to ride a bicycle until your parents gave you a bicycle and put training wheels on it and then took the training wheels off. You learned. Some of you crashed and burned. None of you on here learned how to drive a car by chance. You had to educate yourself. You had to practice. You actually had to do. And it was scary. I don't know about any of you, but I remember I remember getting into the car the first time where the parents, I had my permit and the parents were teaching me how to drive. Man, I had sweaty palms. I was so freaking nervous. When you did your driver's license, how many of you can honestly tell me you weren't nervous doing that? I was so nervous. I probably was in the bathroom most of the time before it because I was so worked up and nervous. But it was because we were just learning and we were scared and nervous. Your profession, you had to go to school to learn it. You had to go through some type of a trade school or some type of a training or something. You had to be mentored into learning how to do that. There's not one thing outside of breathing and the auto functions that our body does that you haven't had to learn how to do. So why would this be difficult? That all you need to do is just mimic what banks and the wealthiest families in history have done. This isn't hard. It's just new. And then you need to really decide, and I almost say draw the line in the sand and decide, do you want to keep being, that person that just gives up your control of your money, goes about their life, bury your head in the sand and just give it to the banks and give it to Wall Street and a lot of hope? Or do you want to be on the other side and do you want to start creating, start doing, start learning, and start really making a difference? Because that's it. In my opinion, there's only two sides. There's create or conform. And I hate to say this, looking around today, I see a whole lot of conformity going on. I see a whole lot of people that conform and then bitch and complain and blame. See a lot of that. Anyone else seeing that? I don't see a whole lot of creation, which is a major problem because creation is the #1 difference between success and failure. So let's start with just a blank slate. Let's start today with creating. And that creation comes in one of two forms, and each one of you fit in one of these two sides, okay? So I'm going to just draw it on the board, just give you some visuals. You are on one side or the other. And what I'm going to do is in this one, I'm literally just going to draw a circle. You have money. And that comes in a lot of shapes and sizes. Maybe it's savings. God forbid you got that bunch of money sitting in your checking account. Maybe you got some CDs. Maybe you got some specially designed and engineered whole life. Maybe you got some self-directed IRAs, 401ks, home equity lines of credit. You guys get the drift, right? You're one of these. So that puts you on this side. Now on the other side is the rest of you. You need money to make money. So just as a roll call here, let's just put it out because, hey, as much as all of you, know what side you're on, let's do some networking. So real quick for all the audience, we got 100 people on here. For everybody that has money, savings, checking, CD, BYOB, self-directed IRAs, 401ks, HELOC, anywhere, you have money that you want to work for you. Can you right now put in the chat money or just a $? Let's just do a roll call here. Now, for the rest of you, I want you to pay attention. I want you to look at this. All these people have money, and they all have a problem, and they're all saying that they have a problem, and that is they want to make more. Just pay attention. And you guys, you know, just grab your mouse and scroll through that. You can even write down some names and numbers, because I bet you either now or in the near future, these people are going to be on Private Money Club, and you're going to want to know who they are, right? And let's see, 1031 exchanges. Absolutely, Greg. Yeah, you got money. You just have access to money right now, and you want to make more money. That you fit on that side. Okay, now let's pause that. Now, all the rest of you, and this is easy, for this is the rest of you on here. You need money to make money. Okay, nothing wrong with that. I've been on both sides. Steven's been on both sides. You need money. So in the chat right now, I want you to put need. If you're that person that needs money to make money, I need you to put need. Now, all the people that just put the dollar sign or put, you know, money there, you should really be paying attention, because all these people are your potential borrowers. These are the people that you would build relationships with. And the funniest thing is, well, and there is some overlap. Some of these people that need money are the same people that have money, and that's perfectly normal too. Like me, I need money and I have money. You can be on both sides, but I really wanted you to define, without me telling you that, which side you think you fall on. You need money or you have money. If you're both, just pick one that's more prevalent. So we've now split this audience. We've split 100 people here to people that have money that want to make more and people that need money to make more. So now let's just talk about, what does that take to make these two people come together so that the people that need money have their problem solved and the people that have money have their problem solved. And really that just comes down to the middle. And I'm just going to write education. Okay, and that's really all it is. The other thing I want to do is I want to highlight that this circle represents community, represents culture. Because I think we can really be honest with ourselves and say that all of us are subscribed to this culture where you want to take back control of your money. You want to take back control of your financial life. So that would be the culture that we've got inside of this community right here. I'm not talking about Private Money Club. We'll get there. I'm talking about the community we are in right now. You could call it a webinar or whatever. I'm calling it a community that has a culture. What we're going to cover today is the education. We're going to break it down in two different parts. We're going to talk about first, people that have money. Okay, so all the people up there that have the little dollar sign or the money, you have money and you want to be the bank. So what are the things that you need to learn? That's the very first thing we need to do. For all of you on there that have money, so you are the haves. And I'm not saying the other people on here are the have-nots. They're just the people that need money. So you are the people that have money. So over here, and it doesn't matter where your money is, okay? Your money resides somewhere. So we're just going to put it that way. And I don't care how much you have. Maybe you got 10 grand. Maybe someone on here has got 10 million. So it doesn't make a difference. Dollars are just tools. You got one person's got 10,000 shovels in the garage. The other one's got 1 million. Now, what we're going to do is we got to figure out, what does it take to be safe? All of you that have money in the chat, what I want you to do is I want you to tell me, what are the most important things that your money making more for you would have to fit into? Like, let's create a little box. Actually, I'll just make this the box. It's more of a rectangle, but you get the drift. What do we want that money to have or do? Okay, so we got, Stephen, just read those off to me. We want to make a return on investment, security. Okay, what else we got? Want to make more? Yep. Want the money? Yep. Grow. Got, okay, we'll put growth, compound interest, scalable. Okay, so we want to be able to scale. I like that. Want to be able to 10x that money. That just takes time. Okay, legacy, freedom. They're all great words. There's no wrong answer. Safe, consistent, predictable. I like that. Let's hit the ones that are usually the most popular. Okay, first off, return on investment. We want it to be secured. Do legacy, freedom. I mean, really, they're all important. Consistent and predictable. So let's just knock these out. So from a return standpoint, what's a good return? Like, what kind of return would all of you that have money like? And all of you that need money, you guys, I hope to God you're paying attention, taking notes, you're writing some names and some names down, and also writing what these people say that they want. What's a good return, good ROI for the money that you have? 15, 10. All right, so we'll go over here. 10%, 15%, 10, okay, 12 to 15, 20, 30. Okay. Because by some of these numbers, we're going to have to do different strategies, right? 30% is a different strategy than 12 to 15. Yeah, but Robert, I'm just going to, anybody that kind of said as much as humanly possible, your mind can't articulate as much as humanly possible. That's like your mind can't do that. So we need to put a number. So Robert, let's rephrase that. Just think of like a percent. What percent is as much as humanly possible? It's very important. 300%. Okay. I'd say be very careful trying to get 300% in these markets right now, because chances are, Robert, if you try to, and I perfectly fine with 300%, but if you strive for 300% right now, chances are you're going to lose it before you make it. Okay, Martha said same thing with the 50%. Okay, 50%, you know, you're starting to get a little excessive in the returns, but that's okay. We'll talk about how you can do that. All right, so we got 20s, 12s, 15s, 10s. Good, good. All right, so now everybody
remember the laws of wealth, Chris, the laws of wealth.
Yeah, laws of wealth. So, you know, it's the fourth law of wealth. If you seek unrealistic returns, your money will be yours no more. It's very important. So for Robert, Martha, and maybe a few others, just be very, very careful. I admire you for wanting those returns, and you can get there, but just please don't take excessive risk for doing that. Don't be unrealistic. The rest of these returns, you know, 30 is a bit outlier, but like I'll show you how you could do that. You know, we just got to be very cautious about the return, because the higher you get this return, the more risk you're going to have to take. It's just the law of how it works. All right, so that's the first thing. Now, security. Security is a really easy thing. So how we think about securities, it can be a couple different things. Number one, security can come in the form of a contract. Some contracts can actually provide guarantees, but make sure whoever's guaranteeing it actually has the ability to guarantee. How about security? Who else on here? Like with security, what else do you think about when you say security? So contract with guarantees, or just a contract. We can kind of call each of these a separate thing. How about assets, right? Tangible asset. Because we got to start thinking like a bank, right? So a bank is always going to want collateral. So I'm going to write collateral. Let's see, return on investment, first position lien. Yep, lien, collateral, same thing, first or second. Okay, so we can actually start getting a little bit into this. We can start saying, okay, they want a first or a second position. In other words, they want to be first, numero uno, for whatever asset is collateralizing that. Some people are okay with a second position because, hey, maybe there's enough meat on the bone, in other words, to not just pay back the person that's person that's first, but also plenty to pay back the person that's second. Now let's take this lingo to a bank. What does a bank do from a contract standpoint? They do a note, okay, a promissory note. It's every loan that you've ever done. They might not call it a note, but it is a note. You've always signed a note. The note is very specific. The very first thing that we need to start understanding is that you never ever send your money out to work without some type of legal document that will lay out the terms, the note, and we're just going to call that a note. Sometimes PPM could be another word, and the note's going to call out the rate of return. So now we can bring this over to here. It's going to call out whatever the return is. We'll call 10 to 12%. Okay, it's going to call out the payment. So how much is that payment? Is it simple interest? Is it, you know, is it interest and principal? However you want to do it. And then down here, it's going to lay out a term. For how long is this money going to be out? And then it's going to lay out the consequences in most cases, like what happens if you don't pay, what happens if you're late charges, and, you know, at what point do we go after to take back the tangible asset that was collateralizing the note? First thing we need to do is a note. Now, if I may, I'm just going to put something up in front of you. And I'm going to urge all of you to get yourself a good attorney for this. This is the note. And we have sample documents, and we'll have more sample documents on Private Money Club, but this is just a promissory note. There's nothing complicated about this. There's not an attorney out there that doesn't have a standardized promissory note. Heck, you could probably go to LegalZoom and get a standardized promissory note. It's just an IOU. You can see it's got all the information. Shouldn't probably have his info in there, but we'll just get him out. Down here, you know, obligation to pay. So we write the dollar amount out. The loan documents, what's going to be the security instrument? You can see it there. Is it a personal guarantee? Is it a mortgage? What is it? Okay, so we're going to call out what we want. In this case, is it saying applicable, whatever is applicable. Then down here, the interest rate. So some of you said 10, 12, 15, 20, 30, 50, 100. Right, there you go. So the lender is not going to sign the note. Okay, this note, if we get to the bottom of it, and this one's a very detailed one that I use a lot because it calls out everything. Literally, like they don't pay, they're paying for the legal fee. It calls it all. You got to initial a whole bunch of stuff. Here's what happens if you default. Yep. Here's your sign. And then down here, borrower. The borrower, the person that's borrowing the money, is the only one that signs. Now, whether or not you get it notarized is up to you. I typically don't get them notarized because I've got a mortgage that is going to get notarized at closing, but you could go this far. So, I mean, if you don't want it notarized, you just delete that out. So this is just called a promissory note, or it's called a note, promissory note, whatever you want to call it. Every single attorney can use this, okay? And promissory notes come in a lot of shapes and sizes. Maybe you're not, this would just be if you're just lending money. But to get those 30, 40, 50, 300% returns, you're not going to just be lending money. Nobody's going to pay you 50% return on your money. Well, and if they are willing to pay you 50%, I'm not lending money to them, period. Just, you got to draw the line somewhere. You know, if it's an unrealistic return, you know you're probably not going to get paid. The other thing too with this is you could do a joint venture agreement. Okay, so let's just say you want to get in the deal, you want to participate in the returns of the deal. Let's just say it's a flip or it's a storage facility. Then you might want to share in the profits of the company. So instead of a secured promissory note, you would do a joint venture agreement, okay, which would then come with either equity or some tie into the company, so that now you could even ask for an interest rate. You could have a note and a joint venture agreement. And that note could say, hey, I want 4% interest, okay, a low interest rate. You know, I'll give you the money, but I want 4% on my money because it's going to cost me that much to use it. And if it's going to cost me 4%, I also then want 20% or 30% or 50% of the profits. 300%, well, I mean, if the deal does really well, you might make 300%. You know, it's been done time and time again. I mean, Peter Thiel, you know, just look at his track history. I mean, PayPal, and look at all of them. They start with $2,000 and they turn it into billions. It's absolutely possible. So for all of you that are watching this, I just, you know, and Stephen, I'm just going to pin this so that they can kind of take some notes here. That's the note, okay? So note, JV agreement, whatever you call it, whatever you want that to be, is all going to be driven by what your expected return is. You know, for those of you that were 30, 50, 300, you're definitely doing JVs. So get yourself a note first, okay? Get an attorney, get a note. Don't cheap out on this because you can customize the note to be anything you want. The note is the first part for getting everything lined up, but the note does not give you any real security. The note is just terms. So all we're going to do is we're going to write down the note equals terms, okay? Almost the rules of the game. Here's the terms for me to lend you my money. I've got money. We've already identified that. And I have a rate of return I want to make. I want that money to be secured. I want it to grow. I want to earn compound interest. I want to scale this money. I want to 10x it for those the bigger returns. I want to provide a legacy. So should I die, this note then is payable to my daughter. I want freedom, which is provided around the interest rate. And I want consistent and predictable return or interest, which is the monthly payments. Okay, so you got it. We covered a whole bunch of bases there. The second thing you're going to need, so note is terms. Now, the next thing we're going to do is just another legal document, and this is going to be the security. Now, in every county, this is going to look different. So I don't have a sample that I can show you because mine will not apply to yours. Wherever you're at in the state or the country, I should say, you're going to have a different security instrument. Now, the security instrument 9 times out of 10 is going to basically be a mortgage for real estate. So I'm just going to write down a mortgage or a lien. Okay, because we all have seen these. Your car loan, the bank that lends you the money to buy your car has a lien on your car. So in other words, if you try to sell that car, if you try to refinance that car, you would try to do anything with that car, bank's getting paid. Why? Because they're smart, because they collateralized a tangible asset. So here we go. This is our security where we're going to take that tangible asset. I don't care if it's a car, I don't care if it's a house, whatever it is, that, you know, a boat for all you Floridians, you know, that's your boat. This asset is going to collateralize this either in the form of a mortgage or a lien. Now, here's where you don't have to be smart, and please don't try to be this smart. Do not do your own mortgage. Do not do your own lien. That'd be crazy. So your mortgage and your lien, have an attorney draft them, because they have to not just be, you're not going to just have the borrower sign a mortgage or a lien and be like, oh, I'm done. You know, the note, no problem. They can just sign the note, you know, or maybe get it notarized and that's done. But the mortgage has to be recorded. So I want you to write a keyword. Security must be recorded. And it's usually at a courthouse. Sometimes DMV, you know, whatever. It's got to be recorded. Without the recording, the piece of paper means nothing. Because Once they record it, that's basically going to lock the asset so that this collateralized asset is going to now be tied to your money and your loan in the form in nationwide. They can't sell that car anywhere. They can't just drive out of New York and go to PA and sell the car and be like, oh, that was a New York mortgage or a New York lien. Well, we're going to sell it there. That's what I like about real estate. Cars are cool, boats are cool, but they move. Cars, you get in it, you can take it across the country. Nope, I thought they lived in New York. Nope, that car's now in California. So it's a moving target. Real estate, I don't know. I mean, I guess it could happen, but Stephen, how often do you see houses going down the street on the back of a truck?
Not too often.
Yeah. So the house really doesn't move, right? So it's a better asset, a better security because it's pretty well fixed. Now I know you can pick your house up and move it, but it's not going to go easy, and it's not going to go very far. I mean, maybe a mobile home park, but you get it,
when
right?
I was young, Chris, we my dad had a buy here, pay here car dealership, used car dealership, and we had a repo guy. If you ever know repo guys, they are some of the most wild people you ever meet. But the stories that they would have, it's like chasing these cars and stuff. So thank goodness houses cannot be moved.
Yeah, thank goodness, because but cars can. So you can find them. I mean, they got all sorts of ways. You can put trackers on a car. It still doesn't matter. Even if the car goes across the country, they can't sell it or do anything with it because it's got a lien on it.
Yep. We would chase them across the country too sometimes.
Yeah. But that's got a little bit of extra risk. You can see if you're lending money on a car, the added level of risk is the fact that number one, the car could be burned, it could be trashed.
29.9%. So those of you that want 30%, get in the buy here, pay here game. 29.9 all day.
Exactly. So for those of you looking for the 30% return car, people will probably
get a repo guy.
yeah, exactly. But I mean, that's where that is. Maybe a boat too, but a house, probably 12, maybe to 20. Okay. You probably get 12 to 20. So everybody's tracking right now, right? If you're a person that has money and you want to make more, these are all the things everybody said we want. These are going to be the rules of engagement. First, we need a note spelling out the terms. Then we need a mortgage. An attorney is always you should have an attorney do both, because if they're going to do the mortgage, they're going to do the note as well. But just always have the attorney do it because they're going to be recording it. We want to record that. There's one other document that we got to really think about, because if you're lending on a car or a house or anything, I mean, natural disasters hit. I mean, look at Tampa in Florida, right? That hurricane that came through. Houses were decimated. Literally, when that surge came in, there was houses that were decimated. Let's say you were lending and you had your notes and your mortgage on that house, and there is no house. There's just a concrete pad because that surge swiped that house out. Do you think that person is going to be able to pay you on that note? And if you want to take the property back, do you really just want a concrete pad? So this is another thing, and this is oftentimes missed. How about insurance? We love that. How about making sure that you've got some insurance? And there's different ways to do this, but I always just say be additionally insured. Okay, make sure you're added to the insurance policy. It costs the borrower nothing. So if you're lending on a property, and we'll get into the checklist in a second, but you're lending on a property, by the time you get to the point where the deal is going to close, just say to the borrower, hey, listen, do you have insurance policy on this yet? No. Okay, I need you to get one. I'm not going to close. I'm going to call the attorney and tell them until you provide an insurance certificate naming me additionally insured up to the amount that I'm lending in the note, I'm not authorizing the deal to close. You watch how fast that person will have insurance. Probably an hour. About all it takes. Stephen, when you need insurance on one of your properties, you just call your insurance broker, right?
Mm-hmm.
And they send over a certificate of insurance in like the same day, an hour. And if you needed to add somebody as additionally insured, it costs you nothing. Oh yeah, hey, by the way, put Stephen Nagy on as additionally insured. He's lending 150 grand, so just make sure he's covered up to 150 grand as additionally insured. You can get real technical with that, but I'm just giving you the baseline. So why don't we just make sure we're going to then continue to protect. So insurance equals protection. So now we've got security, protection, and we got the terms all spelled out with 3 documents.
Just like an auto loan. I mean, if you get an auto loan, the bank is the additional insured on there every single time. It's the exact same thing.
Yep. Every single time. And folks, you guys can see the similarities here. Every time you've taken a loan from a bank, or every time you've gotten a credit card, you fill the application out and then you get the documents sent to you. It's a note. Okay, a credit card wouldn't have a lien or a mortgage, but every car loan you've ever done, every boat loan you've ever done, every mortgage you've ever done, there's a mortgage or a lien on it 100% of the time. And every single time you borrowed from a bank, they've required that you get insurance. If it was a tangible asset, car insurance, boat insurance, house insurance, business insurance, liability insurance, you get the drift. So these are the things that we need. And really, that's it. That's pretty much all you need. You need the note, or we'll just say the terms, okay, note, JV, whatever that is. We need a mortgage, if it's real estate, or a lien, so that we're protected, okay? And then we need insurance. And we have covered every one of your topics. We've gotten the terms that we want set up here, okay? Then down here, we've gotten the security that we want. And right here, we've protected it all. This is what a bank does every single day. I know some of you are still thinking, and we're going to get to the questions in a second. I know some of you are still thinking, yeah, well, still seems like a lot. Now let's talk about Wall Street. Your 401ks, you know, Julie's 401k, or anybody that's got a 401k or an IRA, not a self-directed. Let's just talk about regular IRAs, or you've bought stock or mutual funds or ETFs or bonds. Let's just go through these things. Your stock that you bought, your mutual fund you bought, your ETF. Was there a note that you got to control the terms? No. You got a prospectus, right, where they told you what the risks were, and they also told you in that PPM or that prospectus that you could lose it all. So whose terms was that on? Yours or theirs?
Theirs.
Okay, theirs, right? Theirs. Who's now going forward thinking, because we want to be in control. If you were in control, whose terms would everything be on? Yours. So Wall Street doesn't give you terms that you want because it's their terms. Okay. How about Wall Street? When you invested in Apple, or you invested in any stock, any mutual fund, any ETF, did they say, hey, we're thanks for investing in this stock. Thanks for buying this mutual fund. What we're going to do is we're going to give you a lien on all of our office furniture. Or because you make a big investment, we're going to give you a mortgage on our property to make sure that no matter what, like if we don't perform based on, you know, what we're saying in our prospectus, then we're gonna just sell some stuff and make sure that you get it. Does anything in Wall Street provide you security in the form of a tangible asset? No. And in Wall Street, when you buy the mutual funds or anything else that you buy to invest your money in, are they putting an insurance policy on there that if some unforeseen thing happens, like the Fed raises interest rates 7 times, unwinds $95 billion a month in the assets that they're holding on their balance sheet, sucks the money out, you know, the government does some weird things, and all of a sudden we end up in a recession? Is there anything called, there's got to be this out there. Can you buy recession insurance so that if a recession hits, you didn't cause that recession, you didn't do anything, you didn't tell the Fed to raise interest rates? So there's got to be an insurance policy that you can buy that protects you if your stock portfolio goes down to a recession. Does anyone have an insurance that does that?
Called options.
Okay, options.
It's very complicated.
Yes, we're not even going to go there today. So I think it's safe to say that the way you've been taught to invest your money has defied everything that you already told me that you wanted from your money, did it not? Wasn't secured in the form of what we're talking about. Probably didn't have the ROIs, or at least the consistent and persistent ROI that you wanted. Maybe the 10X, but you notice I didn't circle that. Maybe the legacy, maybe the freedom. I guess we could kind of say Wall Street did some, but when we broke it down and we peeled the onion one more time, and we looked at what a bank does every single day with their money, Wall Street came up way short. It's their terms. There's no security and there's no protection. So why in the world do we put money in Wall Street? Oh, hope. That's right. We put money in Wall Street because we hope. We hope a lot. We wish a lot. We pray, and in Wall Street, yes, you pray a lot. Hope, wish, pray. Very powerful words, really powerful. So if you're somebody with money and you want to make more money, this is how you learn how to drive the car. You first learn how to get a note. You second, get an attorney that understands how to secure your investment through a mortgage, through a lien, or some other form of security. And then you just ask the question, can you get some insurance that names me additionally insured? Is anything there hard? Everybody's got that, right? Because we covered the first side. Now let's just hit some questions, Stephen. What do we got? Because then I'm going to move on to borrowers, because we just got the lenders out of the way. Now we're going to move on to borrowers.
All right. Julie said, if I have money in a 401k, what are some good investment ideas if I take a loan on it, loan repayments? our P&I at 7.25%, trying to think of a way to use that money that covers the payment for P&I, since that's going to be higher than simple interest alone. Credit cards, of course, but I don't have that. So looking for ways to make more money. So just on that, Chris, I can just kind of hit on that real fast. So what I would do, Julie, is, a lot of these private lending deals that we're going to talk about in a minute here with Private Money Club are negotiable. Remember, you set the terms. Remember, Chris just asked who's in control. Well, you're in control. So if you need to set it up where they're paying you more than interest, maybe some principal back with it, or maybe they pay you all the interest up front, and then that covers your payments, during the term, or they pay you a little bit more up front and then less in the back end, but you can structure it in a way where it'll cover those monthly payments, because I get what you're saying on that. Either that or you just cover it and pay it all at the end. But I mean, those are some options, Chris, if you want to add to that.
No, that's perfect. And Julie, don't get hung up on the 7.25%. Okay. Because when you take a loan from your 401k, that 7.25% that you're talking about, and you're trying to be like, well, the simple interest doesn't cover that. Doesn't matter. The 7.25% gets paid back to you. You're not giving that money up. So you don't need to worry about trying to make a spread. Yes, I know you're trying to cover the payment, which again, like Steven said, when you negotiate the terms of the note, when we're doing the note, instead of doing a percentage, just be like, hey, I'll lend you 50,000 from my 401k, but my P&I payment for my 401k is going to be $600 a month. So I need the payment to be $800, and then back that into a percentage. See what I'm saying? So you don't need to just come out and say, the beauty about Private Money Club is, like I said, you are in control because it's your money and you're the bank. You set the terms for all you lenders. I mean, when you go on there, when we create here, let me just show you. So when we create our profile, so here's mine. When we create our profile, what we're going to do is we're basically just going to put in there what we're desiring, like how much do we want to make? You can put anything you want. Here's a lender, 250,000 investment range right now that I have to lend. Over here, you could just say, I'm looking to earn 12 to 15%. I got to change my about. This was just early and I just haven't had time to go in and change it, because your about shouldn't be, your bio like we did here. I just did it just as an example. Your about should be your terms. If you're a lender, like, what are your terms? And if you're a borrower, what are your terms? You could even have it, as a lender, I'm willing to lend, between 12 to 20% in a first secured position. Second secured can be considered with the proper collateral. I am looking to lend for between 6 to 12 months or longer, depending. I'm just doing it. And then as a borrower, I'm looking to borrow money between 10 to 12%. I will always put you in a first secured. You can do both. And then in the about, you put down all your specific things that you're trying to do, like your experience. How many deals have you done? I've done 272 flips, been in real estate this long, been lending for this long, all deals will be approved by my attorney, whatever you want to put. This is just your profile. Okay. So you just go in and you put your profile. Then what you can do is, if you're a lender, you just go to browse deals. I mean, there's going to be more functionality here, but right now you can just go in, like, here's 10%. So if that was within your lending, but I know his deals typically are not just 10%, they're 10% plus equity on the downside or on the backside. So he does a really good job. He's borrowed a lot of money and he's done very well. We know him quite well. So you can show, he's going to give you all the specifics of the deal. A lot of them are going to put documents in there too, which I'll show you one that has documents here quick. All right. So here, this one I like a lot. I just sent this guy a message. Go ahead.
One thing to point out on Mike on Curses too, Chris, is it's a non-recourse loan is what he's asking for. So maybe just hit the difference in like a guarantee, like a personal guarantee versus a non-recourse, or what that looks like, because that's what his are, but not all of them are like that.
Yeah. So non-recourse loan, I don't lend to Mike, because he's basically saying that he's not personally on the hook. Okay. So that's essentially what he's saying with non-recourse. So there's no recourse. So
outside of the property. The recourse is the property itself.
Recourse is the property, but if you take this property back, that's all you can get. You can't go after Mike personally for his personal assets. So therefore, no bueno for me. Like, call me an asshole, but listen, if you don't pay me, not only am I going to take the house, because that's the agreement, I'm going to come after you for the payments and legal and all that stuff. And I'm going to sue you. And I'm going to put a lien out there on you, and it's going to suck for you. But I'm also going to know what all your assets are, because I'm going to ask you what your personal financial statement is. And you're going to show me, here's all my assets. So I already know what I'm getting before I even get into it. Like, imagine going on a dating site and booking a date, but you know everything about that person. I love sushi, but I don't like shrimp tar, or I don't like tuna tartar, and I like this, and I go to bed at 8:30, and I don't ever stay up past 11, and I don't drink, and this is my religion, and you're going through, you know exactly what you're going to get. Well, I like to know exactly what I'm going to get, so I ask. So that's the only reason I don't lend to Mike. Now, Mike's been a great borrower. I mean, and the deals always make sense. Like I haven't seen a single deal he's posted that hasn't made sense. But here's another one. Like, I don't know this guy. He just came on. But what I liked about it, number one, it fit my lending needs right now. So I have about 95 grand I could lend. Okay. And he's got all the information on here. So I sent him a message. He's got a whole bunch of people already interested. So now this is the problem with Private Money Club. Like, when it's a good deal, like, you get something like this. I've got some other people I reached out to that are interested. Now I know I got some competition, but that's okay. Because if he doesn't, if I don't get the deal, that's it. But you can see I ask all the things that I want to know. He answers them all. But what I liked about this is he does have the loan proposal. He has the loan proposal. So right here, he's got an inspection report and he's got a loan proposal ready. But all I'm just saying is, if you're just going from the surface and you're looking at the deals and you're going and you're looking at them through Private Money Club, notice he doesn't really, or at least it's not jumping out at me. I don't think he has an interest rate that he's willing to pay. So it's a negotiation. Hey, Bo, if I do this deal, can you pay 15%? So kind of like what Julie was saying, if Julie was to do this deal, she can figure out what her monthly payment's got to be to cover her principal and interest on that 401k loan. And she could just go to Bo and say, hey, Bo, I'll do the deal. I want to be in a first secured position, and I need the payment to be this much per month, which works out to be a 21% interest rate. Let me know if you're interested. Hey, he's either going to say yes or no. He'd probably say no because he's got other people interested in the deal. But you're going to find one that maybe they don't have other interest. These guys are great. Brandon and Dwight, they put a ton of deals up. People love them. They're 12% first lien position. They're phenomenal operators. They've done thousands of deals, so they've done quite well. Maureen's done well, but you can just go through. You see them all here. Second position. So I was talking to this guy's a really good borrower too. Lots of experience. I've gone down the rabbit hole with him, getting all of his info. I don't want to be in second position. So right off the hole, I'm not going to even inquire about that one. Blue Ridge Beauty, 12% interest. That's within my guidelines. So I would look at that. So you basically just have to figure out what it is you like and what it is you don't, and go in and start negotiating. I think this deal's already funded. I'm almost certain this deal's already funded. So 15% interest. For those of you who wanted 15, here's the deal. Okay, 12 months annualized versus 50% equity ownership. Ooh. So now this is giving you options. I love this. This guy did a really good job posting this. So I got options. I can get 15%, 12 months, okay? Or I can be 50%. So then I could underwrite the deal two ways, just on interest, or I can say, well, how much do you think you're going to make on this deal? You could look over his financials and his, I don't know if he's posted it. Yeah, he doesn't have any documents, but this is in Nashville, downtown Nashville. I mean, bingo, that's phenomenal. So maybe you might want to do the 50%, equity, because maybe then you could get that 300% return or that 50% return. Do you get what I'm saying? So there's not just one flavor of deals on Private Money Club. There's all sorts of them. It's just a negotiation, folks. That's all it is. Is it pretty common for large scale borrowers using hard money lenders and giving them first position? Just asking, as I'm in a deal and was initially hesitant about a second position. Some folks might be too risk averse to ever consider second position. Yeah, okay. So I get the question. Yes, it's very common. So what Will's saying is it possible, or is it common for somebody that has a big deal? What's happening here? Let's just say it's a $500,000 deal, okay? And the borrower goes and gets a hard money loan from someone like, I don't know, Finance of America. So hard money loan, they're always going to be first secured position. So now you got somebody in first, and maybe they give him, I don't know, let's say 300,000. And then this borrower goes out, and this property is worth 750, let's just say conservatively. Then he goes out and he says, okay, well, I'm going to put 100 in myself, but I got to raise 100,000, and I'm willing to pay 15% in a second position. Very common, okay? But usually the interest rate's higher because this first position loan might be 9 to 12. The second position loan is going to be a higher because it's more risk. I would never do this deal. I would never, ever, ever get behind a hard money lender. I'd get behind a bank, but not a hard money lender. These guys are typically Wall Street or hedge funds. They're relentless. If they take the property back, I'm not getting anything. Like there's just a good chance I'm not getting anything. So typically it is common, but it is something that I would probably advise most of you not to do. But that's up to you. If you can get 20, 30%, you just got to pencil the deal. The risk has to equal the reward. Okay. Mary said, why do you only have the borrower sign the note? Because the borrower is the only one going on the hook for anything. The lender, I mean, they're your terms. It's your money. The eye with the gold makes the rules. So why would you sign the note? You don't even need to be on the note. The note has no bearing on the lender at all. The note is just an agreement that the terms set forth by usually the lender, okay, are being agreed to by the borrower. You know, when you sign a mortgage at the bank, or when not so much a mortgage, but when you sign a note at the bank, who signs the note? Does the bank sign with you? Absolutely not. The bank never signs the note. You do. You're the only one signing. The only thing the bank's doing is notarizing, right? Think back to every car loan and everything else. I mean, if the bank is signing, it's just because that salesperson or that loan officer, as they call them, has to put their name on there so they get commission for it. So it's just putting somebody on there. It's not the bank actually signing. It's just protocol. That makes sense, Mary? Tanya said, will you provide specifics about using self-directed IRAs? Yes. Okay, let's just do that real quick. All right, so there'd be one extra step. Okay, so over here, we got all this stuff. So if you're using a self-directed IRA, the only other thing you're going to have to get, and this is, we'll just call this, what would that be called? Directions. All right, so in a lot of times, the self-directed IRA custodian will help. So this is just so everybody knows, this is only if you're doing it from a self-directed IRA. There's one more document, and it's called a direction to invest. And all it's doing is telling the custodian where you want to direct your investment. So you got money. Yeah, there you go. Just
So you
go
go
here.
if you're with Horizon Trust, it's very, very easy. You just go to forms at the top of their website, horizontrust.com. You just scroll down to investment forms. If you're doing a real estate, if you're doing precious metals, it has its own. But if you're doing just a typical private money loan, you can do it all online. So you just literally hit submit online. It pops up a fillable PDF file on here. Just agree to the terms at the bottom. Put in your information, the investment name. Just so in this case, it would be a promissory note and mortgage. You just attach that right to here, where you're wiring the money to, all the information. And literally at the bottom here, you just attach the promissory note, the mortgage, any other supporting documents, and then hit submit. And this wirelessly just sends it all right to Horizon, and they do it all for you.
Pretty simple. And even if you don't want to know how to do that, you just get somebody on the phone from Horizon, they'll walk you through it. And then all the other documents that we talked about, they're going to ask you for all those as well. So as you get them, they're going to need a note. So you're going to give them a note, and then the attorney is going to send them a mortgage. So it's all the same thing. You're just adding one additional step, but it's a step that should not scare you, because you can do it yourself, or they can do it for you. Definitely. That's the only added step. Just want to.
Bill's got a good one here for borrowing. Is it okay to post on PMC if I've never been a borrower before, or do I need to have a few years of credibility before prior to posting?
100% okay. And lots of borrowers on there are their first time. The only thing you might have to do, Will, is maybe pay a little bit more, because, or just find the right lender that's willing to lend to somebody that hasn't done it before. I mean, everybody's got to start somewhere. I had to be a borrower for one time. The person that took that chance with me to build the relationship probably was really happy they did. And I know exactly who they are, and they still lend to me today. The only time they're ever mad at me is when I pay a loan off. That's it. So, Will, that's how you get started, man. But now if you go to a hard money lender, good luck. They want you to have at least 1 or 2 deals under your belt. But Private Money Club, it's a relationship. Remember I mentioned in the circle, community and culture. So build relationship. Great question. Tanya, also, can an inherited IRA be self-directed as long as it's distributed? Yeah. I mean, it's just the assets in the self-directed IRA. It doesn't matter as long as you're taking your income. Yeah. Just so if you are going to use an inherited IRA, the only thing I would suggest is make sure that you're making a loan or doing an investment that pays an income, not something that's going to tie that money up. Because if you got to take money out, then yeah, it's very important. Is there any vetting of members of PMC, or is that up to the individuals in the deal? That's a great question, Marco. We do not vet any of the lenders or borrowers in there. We just make sure that they're real human beings. The only other vetting that we do would be we're making sure that the borrowers have to be an entity. Okay, because you cannot lend money to an individual. It's non-owner occupied, so they have to have an entity. So I don't know if it's in there yet, but it's coming very soon. There's going to be a part when they post the deal they're going to have to also post their entity documents, which then gives you, Marco, the ability to go in and research the company. You can pull a search on it. But when you're talking about the vetting is up to you. Just like a dating site. eHarmony's not vetting the members in eHarmony, you know, to make sure that they're, oh, this is going to be a solid date for you. They're definitely going to show up probably 5 minutes early. You know, there's no vetting. So the whole idea here is this is a community. It's not our job to vet your borrower or your lender. But what we have done and what we are continually improving on, just while I'm showing it, is we've got a software called House Folios that allows you to do your own underwriting. So this software will allow you, and we did a demo on it the other day, and we'll have a demo on Private Money Club very soon of how this works. You can go in and you can do lots of underwriting very simply. I mean, you just add a property, it goes through, and you can get as much info. You can pull comps. You can do all the stuff. You can even look at a deal that's on Private Money Club where they say, oh, it's this, we're going to make this much money. You can go in here and you can simulate that, and the software will actually tell you, depending on how you do it. The software will actually tell you whether it's a good flip or not a good flip based on the inputs, and then you can change the inputs. I'm not going to go into demo on this, but there is software inside of Private Money Club that allows you, not us, you, to vet the other borrowers and underwrite the deal. Again, there's a learning curve here, folks. If you don't want to do any of that, we have other options, okay, which aren't so much just Private Money Club, but we have funds where we do the vetting of all the deals in there. So we have 2 funds right now, Cashflow and Inicio. Did I say that right?
Yeah.
Inicio. Okay, I always say that wrong. 2 funds where we do all the underwriting, we do all the vetting of the deals that we lend on, and then you participate in the returns with us. So Inicio is a 4% pref plus upside on the back end when the deal sells, and that upside, our target is double digits, high double digits. Where Cashflow is just a flat interest rate. It's just a debt fund. So you invest in Cashflow, and you're going to get a payment every single month based on whatever duration you did. So it could be 6 to 10%. Okay, Unanimous said, so we owned a mobile home court outright and sold it. That's good business, but carried the note on it. Smart. Payments are around $2,000. My borrower has been paying $1,000 more than the payment, and we are horrible at not saving that money. So we just spend the money they pay us, and now we're losing interest because he's paying more principal. You done screwed up, son. That's about all I can tell you. Depending on the structure of the note, okay, it sounds like you had an amortized note, and what they did is they accelerated the amortization. So now they're just like any amortized note. You just failed to look beyond the payment, and you didn't look down the line. So right, yeah, that's how all amortized notes are. I don't lend on amortized notes. I only lend interest only notes. So I don't ever get into this situation. That's a tough situation. Yeah, you're definitely losing interest, and there's not a darn thing you can do about it. I mean, you could go back to them. Why don't you try going back to them and try negotiating a new structure? I very much doubt they're going to do it, but you gave them the structure. You gave them the amortized note and payment structure. So if you did, they're in their full right to pay principal. It'd be like the bank. You could advance all the interest in the note so that the bank is really getting no interest in the later years. So you did exactly what a bank does, but you didn't think about the consequences. So Unanimous, it's a tough situation for you, a good situation for the borrower, or for the borrower. I don't know. I don't really have any thoughts for you. You're pretty much going to have to lie in the bed that you made. And I know that's not the answer you want to hear. I still cannot view PMC on my iPhone. I can only view it on my desktop. It is fixed. So really? All right, hang on. Let me just demonstrate that we fixed all this. You might be talking about the app, and the app right now, the only thing we're waiting on the app is the app is at Apple getting approved. So all apps have to go through an approval process by Apple. So that's all we're waiting on. And we should have that week, I'm hoping. But if you're just talking about being able to go on your phone and look at it, man, that's been fixed for a while. When did you last try? Private Money Club. Okay, there it is. Okay, so we're just going to go to privatemoneyclub.com, and I'm doing it on my phone right now, folks. Because, hey, listen, most of us do everything on your phone. You guys can drive down the road 65 and check out deals. Bingo. Okay, so here it is. It's all fixed, all mobile optimized. If I log in, you would think I would have this saved on my phone. I mostly use my desktop for Private Money Club. Here's how it looks. So everything works. It's all perfectly centered, perfectly aligned. I can do everything from communicate. Everything I can do on the website, I can do on the mobile optimized site. So if I want to get funded, I want to browse deals, I can just click that. So I can't remember who said that. Oh, Matthew. So again, I just don't think you've been on in a while. So it's all right here. It literally works like a freaking dream. And I don't mean to say that. I use my iPad a lot, and dude, it works really freaking good. The mobile optimized part was a little tricky for us in the beginning, but we've knocked it out of the park now. I mean, everything functions really well. The messaging, I mean, you're going to not even know that you're on Private Money Club. You're going to think you're on your iPhone or doing that. So you go to messaging, it's right here. Look at how good that is. Got all the stuff right there. I can send messages. I can post, if I got a document I want to put up, I can post a document up.
Should a lender expect to get a monthly payment on a deal or wait until the closing? So Matthew, that's all again set up in the terms. So it's up to you really. The majority of loans that we see are going to pay a monthly interest. So whatever the interest charge is will be paid monthly, and then a return of the premium at the end. But you can structure for points up front, points on the back end. You can structure it to pay you interest and principal throughout. You can amortize it if you want it. I mean, you can really set it up, but the most common is going to be interest only payments during the term of the loan. All right. So Wing's saying, help me with the math. Say you go for 12% on a 100,000 deal you showed us. What's the monthly? Confused on simple versus compounding. So that's a good example, Wing. So $100,000.
Well, here, hold on.
Yep.
Let me show them how to do it on the site. So you just go in. We got an interest calculator here. What was the interest rate you wanted? 12%. Go to 12%, 100 grand. And we built this. This is custom. 12 months. Just do that.
You have to do 12. That's the only way to make it work.
There you go. $1,000 a month. So, and then we'll probably add that, but we don't right now have a calculator that does amortize. So what you would do is just go to somewhere like bankrate.com. Let's do a mortgage calculator, and I'll show you the difference. So simple interest just means it's the same interest every single month. Let me show you this. Sorry, I like visuals. I know we got to get moving because we're going to quickly run out of time. But right here, we do loan amount, 30-year fixed. There's the interest rate monthly. Now let's just say I got to go to a better one. Bankrate.com is one that I like a lot. Mortgage calculator. All right, so we'll just use their numbers, right? $425 down payment. I just want to show you the difference. So if I want to look at the amortization, I come here. Remember, this is what that person was just talking about with their mobile home. So I want you to look at this. So here, principal interest, amortized, heavy interest up front, low principal. But what happened with that mobile home deal that they did? The person was, paying off principal, which basically pushed the amortization down. So you can see down here where we're talking interest and principal, and this is just looking at it as a combined total, but it switches over. So now all of a sudden, expand all years. Now all of a sudden, the interest and principal that you're getting in the later years is heavier to principal versus interest. And it takes a long time. These are monthly, but the calculator can do it that way. I'm just trying to show you. This is 30 years. So like here, 1900 is going to principal, only 306 is going to interest. So that's the difference between principal or simple and amortized. Is there a fee for Launchpad? What's Launchpad? If you mean house folios, you get 3 deals. So you get to underwrite or use house folios for 3 deals. And then after that, it's $29.99 a month. So I think maybe that's what you meant. What are the top criteria for priority items you look for first glance in lending? See, the other thing too, a lot of these questions, folks, like notice we talked only about people with money that want to make money, and then there's the borrowers, but we're really covering a lot of the borrowers just by getting to this, because the borrower is just the flip side of the coin. What are the top criteria for priority items you are looking for at first glance? To be quite honest, Matthew, what I'm always looking at is the person. So the very first thing I always ask for is a personal financial statement. I want to lend to a person that I know can pay me back. I want to lend to a person that I know that has financial backing behind them. And that's what I look at first. In the deal, location is important to me. So I'm going to look at location. I don't want to lend, in an area that's a hurricane prone area. I don't want to lend on deals that are longer. Like right now, I'm mostly seeking 6 to 12 month loans or less. So I'm lending short term. So that everybody's going to be different, but that's a good question. Do I lend? Yeah, there is a lot of people I don't lend on vacant land, but there is a lot of people lending on land in there. It might be a lower percentage, like they might only lend 50%, but they are. Is there a limit on investments in in your funds. Yes, so 15,000. So Bill, the funds, there's two, Cashflow, 15,000 minimum, and this CO is 25,000. And then Rob Fuller's 100,000. So 3 different levels. For the private funds, we have to be a PMC member. Yes. Now, as much as I want to run a charity, the private money club is not. We gotta pay the staff, pay the developers, otherwise none of that exists. So yes, it is. You can go in and do a free account, but you're not gonna be able to do anything. You're just gonna be able to look. And pretty soon we're gonna be really clamping down on the free people in there. Help me think through arbitrage by loaning my IBC, see the cash value example. My loan is 5% in the life insurance and I loaned it out at 12. What's the resulting? Oh yeah, okay, that's a great one. So Wing, I'm just gonna write that. So what he's asking is IBC. He's got money in his IBC. I'm just going to use round numbers, 100 grand. Okay, finds a deal on private money club that pays 12%. Okay, lends the money over here. Let's just call it 90 grand. You can usually use about 90%. Lends 90 grand, 12% interest. Comes back, puts it back in his policy or puts it back in his segregated account, whichever one you choose to do. The $90,000 loan is going to cost usually about 4%. So and then your policy over here is making 5 to 6%. Okay, so this is, remember, your policy is earning uninterrupted. So even when you took 90 grand out, a lot of people are doing the math. They're saying 100 minus 90, so I'm only earning 5 to 6 on 10. No, you're earning 5 to 6 on 100,000 because the 90, this is an advance of your death benefit. Okay, so this is the insurance company's money, which is why they charge interest on it. Your cash value here still stays in your account earning interest. It just collateralizes this because insurance companies are smart like banks. So really you could do the spread 2 different ways. 12 minus 4. So 12, 11, 10, 9, 8%. So you got a +8 spread here. But then whatever your policy's earning, you're making this too. Or how I often do it is I take the 6 minus the 4, and that's a +2% spread gross. Okay, that's gross. So then 8, 9, 10 gross. So you can do it either which way, but does that make sense? It's pretty simple. All right, we're gonna defer some of these questions. Stephen, if you want to look through them and maybe answer some of them, we'll get to that. But I gotta move on. I gotta get to borrowers here. So we understood all this stuff for the lender. Now what we're gonna do is now we're gonna talk about the borrowers. Okay, so the borrowers need money. So now let's go back to all of you that said need money real quick. What are some of the things, like, let's start with this. What is an interest rate you'd be willing to pay for money right now? Remember, we got to kind of see how our goals align with the lenders, 10 to 15. All right, so 10 to 15, we got one person that came in, 12 to 15. All right, good. So 12 to 15, 10 to 15. What are some other things that you'd want from a lender? Like what would you want? What kind of terms? 12 months, 24 months, 36 months? Like give me a range. Like how long do you want to borrow money for? Let's come in 6 to 12 months. Matthew, I like you, man. I'd lend to you. 6 to 12 is my sweet spot. Are you saying that just because that's what I said I lend on? Anyone need longer term money? Because there's a lot of lenders in private money club that will not lend on 6 to 12 month deals because they want their money out there working longer. My business partner. Yeah. So Tanya, like there's a lot of big lenders on there that want their money out longer than that. They want like 36 months beyond. 18 months is key. I'm glad somebody just said 18 months because 18 months, 12 months, 6 months, like all these are great. 18 months is a very critical interest rate because that's going to, at 18 months, you're going to get the people that are okay with longer term and probably a lot of the shorter term people might be willing to go. 3 years, okay? 3 years, good. All right, so the expectation's perfect. I know a guy who looks for 3 to 5 years, but he's a big player. Yeah, most of the people in private money club are going to fit all of those terms. So remember, the lender is going to set the terms. They're going to have an ROI they want. You guys are good with what you said, 10 to 15, 12 to 15, 6 to 12, and then your duration. And then are you, what about for collateral? What are you willing to put up for collateral? Yeah, and Will had a good one. Flexibility on monthly versus end payout. So a lot of lenders like Chris Rude, he's trying to move. Chris Rude's one of the preferred lenders on there because people love lending to him. He's trying to move to back end. He's trying to put all the interest on the back end, but he's willing to pay a higher interest rate because then he doesn't have to have the cash flow going out during the period of the time. His deals are short though. So I will say one thing, Will, if you're going to do a back end payout, most lenders are going to probably shy away from the deal if it's longer than 12 months with a back end. I would want nothing to do with it. I'm okay waiting 12 months for the interest payment because then I get a bigger payment. But you know, for a lot of people, that would limit the amount of lenders you'd have, because some of the lenders are lending from a 401k, lending from a policy, lending from a home equity line of credit. So therefore, they have an expense to lend. So they're going to be out of pocket for all those months. It just adds another element. But really good, 10 to 15 years. Yeah, there's definitely people on there that will lend 10 to 15 years. But only thing I would say, Tanya, to 10 to 15 years right now is you're going to have only a couple lenders because of the economic environment. People are scared because of what's coming. So they're shying away from long deals like that because there's too many interest rate fluctuations. So they could lock into a deal with you at 12%, but then, you know, 3 years from now, we could be in hyperinflation again. And now all of a sudden 20 is the new norm. So there'd be a lot of provisions for someone to go 10 to 15 years. That's going to be more of the bank or the hard money lenders out there, and they're going to rob you blind. Yeah. All right. Perfect. So we got that. So now we've set our expectations. Now let's just go to the same thing we talked about before. As the borrower, so you're the borrower, our expectations need to match that of the lenders. So if we're going to build a relationship, we got to have similar viewpoints, rate of return, term, and then we also got to be willing to put up the collateral. And we also are going to have to, if you want to be a good borrower, here's what I would tell you. You're going to have to be able to structure your deal really well. We call it the perfect loan proposal. Go on and get the book, folks. So if you go in and get the book, all you borrowers, like, this should be a mandatory thing. Go to chrisnaugle.com and just get the book, because in here, it literally shows you exactly how to structure a deal. And I will tell you, there's probably very, very few lenders on Private Money Club that would not be okay with the perfect loan proposal. It's going to cover everything that you need. So I'm not going to spend time going into this, but I'll blurt out a couple things. So the perfect loan proposal would consist of a credibility piece. It's your who, your what, your why. On Private Money Club, eventually we're going to have a template of this, but we can help, you know, with that in different things that we do. Okay. It's going to want to know about your deal. What are the specifics of your deal? As detailed as you can get. It's going to want comparable sales or CMA. Okay. Comparative market analysis. You can get that from the software in Private Money Club. It's going to want to know the appraisal or the BPO. How much does somebody else, a third party, say your property's worth? And is that in line with what you're saying you're asking for? It's going to want your LLC, your corporate docs, your personal financial statement, supporting documentation. So if you say you got $1 million in the bank account, prove it. Support that. Okay. So I would want to see supporting docs. I want to see a list of all the real estate deals that you've done. I just lent money to another tailor on here, and he sent me a spreadsheet of all the real estate deals that he has and all of his rentals. That made me feel nice, warm, and cozy, because I just tallied up. Well, he had it all tallied. I'm like, wow, you're bringing in this much, and that's how much you're spending. You got a nice cash flow going on every month, which means I get paid. That's what I care about. I care about my return. I care about getting my payments every month, and I care about returning my money at the end. That's all I care about. 3 years tax returns, I'll often ask for that, especially if it's somebody I don't have a relationship, and credit reports. And then it goes in here and it really shows you, and it shows exactly how your deal should be structured. Like, literally, it just walks you through what does a good deal look like? I mean, visuals. So there you go. That's a deal. And then there's your spec sheet and all the rehab and the comps, and then all the photos. Like, it's just going to give you an example, and then it explains the perfect loan proposal. That's it. So trying to keep that simple. I'm just going to write perfect loan proposal and then reference book. So learn how to structure your deal. Not only that, get some stuff put together in the back end. If you're a real estate investor and you've got real estate deals you've done, organize them. Show me, as the lender or any of the other lenders on here, show me your real estate deals. I want to see them. I want to see behind, drop your pants. I don't mean to say it that way, but like, I want to see your personal financial statement. I want to see what you got. How much money you got? How much you got in retirement accounts? What's your income? I want to see all that. And I want you to support it. Okay. I want you to show me supporting documents. So I want you to be able to show me at least this stuff right out of the hole. Now I might ask for more, but if you came to me and I inquired about your deal, I said, I'm interested on Private Money Club. We went in here. I'll do it just so you guys can get a visual of it. So we're in here. I'm looking at one of your deals. We'll just go to this guy. So this is your deal. This is your deal, and I'm interested right here. I want to see the loan proposal, or is it still available, or I'm interested in more info, whatever. I'm going to send this. I want you to be able to then, if I'm going to feel really warm and fuzzy, if you sent me all this stuff right out of the hole, I'm feeling super good. Make sure you black out all your account numbers on the supporting documents. And you don't really need to send the supporting documents on a first inquiry like that. Once we get deeper and deeper into it, we'll do that. The messaging center on Private Money Club is secured, so you don't have to worry about it leaking. So this is what you as a borrower needs to get good at. Showing the deal. Okay, this is what I want to know. And also show that you have the ability to pay. And then also another thing too that would make me feel really good is once we kind of get into it and I ask you what title company that you're using or what attorney you're using, you send me over an entire sheet with all the information of your contact, your attorney, your title. Because don't you dare ask me to send the money to your bank account, we're done. The second you ask me to send money to your bank account, we're done. Money, and this is for lenders, money never ever gets sent to anyone other than a third party. So I want your third party escrow. And I also want my attorney to talk to your attorney. Hey man, my people are going to talk to your people. Is that cool? Oh yeah, here's my people's info. So you got all that title information or attorney's information. Now I'm feeling cool. Now I'm feeling real good. And then if you really want to wow me, you can say, hey, listen, on all of our lenders, one of the things we do is we do a monthly newsletter. Now I know this is crazy, but and it's not. We do a monthly newsletter that we send out to all of our lenders showing you the progress of the deal. Listen, guys, lender or borrowers, you got me once you say that. Like once you're going to say, hey, I'm going to send you a newsletter showing you the progress of this deal. I'm going to send you photos, things that are going on, market conditions. Dude, I'm feeling real good because now I'm thinking to myself, this guy's done this before. This girl's done this before. You see what I'm saying? Like go the extra mile. If you're going to be a borrower on Private Money Club and you want to raise millions and millions of dollars and get stupid, filthy rich because you got the access to the money, you got it. So play the part. Go above and beyond. Do more. Be more. Make your lenders your priority. I don't give a shit about your deal. I give a shit that I'm getting my money. The deal, that's just the machine you're using to give me my money. Demonstrate that you are going to give me my money and that you're a good operator. And then after that, borrowers, just follow the protocol. Don't make me ask you for the insurance, okay? Don't make me ask you for the insurance. Just say, hey, listen, this is my insurance agent. Who do you want them to list as additionally insured? Great, LC Strategic Realty, perfect. You should be taking notes. And if you're not, like you're missing a full education here. Be ahead of me. I got the money. I can make your dreams reality. I can lend you money and you're going to help me because I want to make money. But you need it more than I do. I already got money. I'll find 10 other people. You need the money next week. Get ahead of me. Make it seem like you're 2 steps ahead of me all the time with everything that I'm going to ask. Hey, I figure you're going to be asking for this. So I included, our insurance broker who's going to set up the insurance on the policy before we close. Hey, I also sent you over the title company that we're going to use. Have your attorney reach out to them and, they'll be more than happy. I'll notify them that they should be expecting a call. Like now you're ahead of me. And now I feel super comfortable. None of this is hard, folks. None of this is hard at all. It is actually very freaking easy. So with that being said, Stephen, let's wrap this thing up with trying to get through a couple more questions and see what we can do. What do we got here?
Yeah, I hit most of them. There was a good one here. I just wanted to kind of talk out loud because it's a good question. Many of the newest deals in PMC appear to be flips, which are concerning given current market conditions. So thoughts on that?
I disagree 100%.
Yeah, me too.
Because there are flips on there. I've been looking at the flips on there. I like the flips because they're nimble, they're short term. And the deals I've looked at on there, these people are stealing these deals because there's a lot of risky drivers out there that bought a lot of properties for too much money. You're starting to see markets slip already. I already said 30% in certain parts of Utah. These flippers are going in and buying these properties, pennies on the dollar. As the market deteriorates, like they're going to be able to buy lower and lower and lower. That's the opportunity I want. But I don't want a big, like if someone sends me a flip where it's like a complete gut and redo, not doing that. I need short, fix and flip deals, super, super fast. Yeah, show some of them.
And that's where, just to give you a quick example, so that's also where the importance of the borrower comes into play. Do they have experience in downturn markets? Are they planning for the downturn? Do they have multiple exit strategies? So if the flip does get stuck in a situation where it's not selling, can they pivot and rent it or short-term rent it or refinance it, or do they have options? So these are things you definitely want to be talking to them about. But just to give you an example, we'll use this one again on the front page just because we've been using it all day. So this is Bose. And, he says right here, we're going to be around 30. So, he's buying it. It's under contract for 55. They're going to need 30 to 35 to fix it up. Then he talks about the ARVs of the comps in the area. So this one sold 2 streets over for 170. We are going to make it look better with higher end finishes, but he still is taking the market into account because look at this. I think with the market downturn, I'm expecting somewhere between 100 and 165,000. So he already knows he's gonna have a nicer house than what just sold for 170, but he's pricing and expecting lower and still has the margins built into it to be able to do that. So little things like that show me, hey, Bo is a guy that I wouldn't want to have my next conversation with because he's already thinking ahead just like I am.
Love it. So yeah, I totally disagree that you just got to pick the right flips. You know, if you got flippers that are doing big deals, overpaying, paying current market, then yeah, avoid them. But you know, every flipper for the most, here's the thing for that last question. If you're nervous about flips, go in and ask them what their exit strategy is if they can't sell it. Like if he can't sell that for 160, 165, if you were reading the message that I sent him, that's what I asked him. I said, what are your alternative exit strategies? You know, are you going to rent it? You know, or what are you going to do? Are you going to refinance it? Do you have good standing relationship with your bank? So you can mitigate all that risk out very easily. Let's see, what are indicators of a good third party for escrow? Yeah, they're pretty much the same. I mean, title company's a title company. I mean, I'm sure there's ones that are better than others, but you just want to, all you want, and here's something I do, folks. This is a lesson I learned. So to Will's thing, if you want, just do your due diligence. It's logical, right? If a borrower sends you over their attorney or their title company, go into Google and type in the attorney and see if they've got a nice website. Make sure that it's a legitimate company. If it's a title company, they got a website. Just, man, that takes a minute. And right off the bat, you're going to know that it's good. Make sure the address lines up with the attorney's address. If you're really nervous, Nelly, call the attorney. Say, hey, listen, you know, I'm looking at lending on a deal for one of your clients, you know, Bo, blah, blah, blah. The name of his company is this. He puts you down as being the attorney that is going to be handling this, or the title company is going to be handling this deal. I just wanted to verify that you are going to be who we're going to, you know, wire the funds to, and that you're going to file a mortgage. And by the way, can you send me over a sample mortgage that you would use for this deal? Okay, thanks, great. You can't do this in stocks. You can't call Apple and be like, hey guys, I'm thinking about buying, you know, 10 shares of your stock. Can you send me over all your financials, your cash flows, and also send me over a list of all the owners that would be personally responsible for this company if it went down? Dude, I've never really thought about that. That's super funny. Good luck. All right, let's see. Matthew, okay, what is a personal financial statement? I'm going to hit this one here real quick. Some of this stuff is really elementary. Go to Google, type in personal financial statement template, and a whole bunch of them are going to come up. So I'm just going to go to images. Okay, so personal financial statement looks like this. So of course, this company's trying to sell you one. And you can see here like cash in bank, retirement, cash value, life insurance should be one of them, real estate owned, all this. And then on this side is liabilities, and then schedule. This is a terrible one. Let me just see if I can't find a better example, folks. The problem with Google is all these people are trying to sell you something. Here's one for free, for a loan, for a lease. There we go. Personal financial statement. Bingo. Right here. This is a good one. And it looks like it's free. Create my document. So you go in, you type it all out. Assets, liabilities. But Private Money Club has templates for this too. I don't know if they're up or not yet. We got a lot of new cool stuff. So cash on hand, cash in bank. Most personal finance, yeah, there we go. Most personal financial statements will include cash value, life insurance, liabilities. We want to know your net worth. Down here, annual income, contingent liabilities, and there's a couple more, but this is just a draft. So that's a personal financial statement. And then you were asking what are supporting documents? If you tell me you've got 500,000 in cash on hand, okay? Let's say cash in the bank. Show me. Send me a statement of your bank account. Go on to your bank online portal and print out your statement showing that you've got 500,000 or close. And then just black out, you know, all the pertinent information. I don't need all the information, but that's it. So what is the PFS and real estate deals? And the real estate deals are just a Google sheet of whatever real estate deals that you've done. And then Mary said, you just mentioned Utah, but that is one of the states that you don't do deals in. All the restricted states right now, folks, we're working diligently with legal, and we have a workaround, a solution. It just takes time. I'm kind of sick of hearing about it. Like, if that's the reason you're not getting into Private Money Club, the only thing I would ask you is, do you have a deal in Utah right now that you want to post on Private Money Club? Oh, you do? Okay, great. Then that's a problem. So then Private Money Club's not going to work for you. But if you don't have a deal right now, and you're not looking to borrow money on a specific deal in Utah right now, why would you not sign up? You can get on there, you can start sending, you can build your profile, you can start sending messages out to other lenders saying, hey, listen, I'm in Utah. You know, I get deals like this. This is what I'm looking for. Does anyone have interest in lending on these terms? I don't mean to be rude, and please don't take it this way, but honestly, I'm sick to freaking death of people using the excluded states as an excuse, because that's exactly what it is. Unless you've got a deal today that you need to post on Private Money Club in an excluded state, it should not be an issue. All we need to do is, in certain states, we need to be a mortgage broker. Every state has different laws. So we've got our legal team calling all the state regulators, figuring out, what do you need from us? We need you to be a mortgage broker. We're not pairing deals up. We're not negotiating deals. Doesn't matter. We looked at the site. We want you to be a mortgage broker. No problem. We've got that covered. We got a mortgage broker in all states, all 50 states in this country, that we're basically working on the legal to get that. So we'll be able to do business in all states. The only one is that's a Hail Mary might be California, because, well, I don't mean to be rude, but California just sucks. Your laws in California are absolute nonsense. All the rest of them you're just making excuses if you're using that. And you know what? That's fine. Keep making excuses as to why not to join Private Money Club because of the excluded state. And then the price will be $14.97, and you could just pay the higher price once the states are approved, which could be 30 days. It could be 3 months, depends on the state. But we're trying to do a sweep of all the states, which is why we're putting together a list of every state that we're excluded to do business in just because of different laws. We're then saying, here's what the state requires, and we're going to do one sweep with our attorney firm and one sweep with our developer to make it all happen as many of them as we can. And Utah is an easy one. Utah is not a difficult one. The ones that we're a bit concerned with is California, and was it Nevada? I think Nevada was the other. Nevada and Arizona, Nevada, and California were the only ones that were tricky. And I think Arizona is going to be okay, but Nevada and California are just whack. The network of PMC is worth the annual fee, basically at $997 a year, best $1,000 you can invest. Thank you, Morgan. Oh, I know, Mary. Mary, I wasn't picking on you. I just used your question as a way to kind of just stress my frustration. You're not making an excuse. A lot of people are, though. When they get on a demo call with our sales team, they're saying, oh, you can't do business in this state, so I'm not going to sign up. Okay. So you have a deal right now. No, I don't have a deal right now, but even if I did, I couldn't post it. But you just said you don't have a deal right now. So you're missing out on going on and building relationships and laying the foundation to get known in Private Money Club as a legitimate borrower, and you don't even have a freaking deal. Keep making excuses. That's going to get you a long way in life. But I wasn't referring to you, Mary. It is something that I am incredibly frustrated about at this point. So folks, was this helpful for you today? We were really excited about doing this training. We really were. It was something I was excited about. I haven't been able to teach private money in quite some time, because the only thing everybody ever wants to learn about is the infinite banking concept and the specially designed whole life, which we're perfectly fine talking about that. But sometimes it's cool to get back to the roots and really kind of get back to talking about private money, which is what we did today. So I just put the link up there, folks. If any of you want to get into Private Money Club, Stephen, can you talk a little bit about the $997 and the $14.97? Is that changing today, or when is that changing? Because we are definitely raising that.
Yeah, I mean, the price is going up as soon as the tech team does it. It's supposed to happen today or tomorrow. So if it's still $997, I would go sign up now. If not, then we're going to raise it as soon as the tech team does it. I don't know. They've been instructed to raise it, so we're waiting on them. And here's the other thing too that could be really advantageous for you is if you all want to do a demo, you want to have the team walk you through and do a demo. We're doing them every single day, all day. And all you do is you just call 833-JOIN-PMC. And you can either talk to somebody right there, ask additional questions, or jump on a demo and actually see the team go through a demo for the software. Those are great ways. And also too, another thing, listen, some of you maybe aren't ready for it. Go in and create a free account. Just know you can't do anything with a free account but window shop. You can go on and look at everything, but you can't email anyone, you can't get anyone's information, and you definitely can't post deals or lend money. But it's a great way to get in and look at it. And then once you're in, if you want to take the next step, then you just call 833-JOIN-PMC. Just think of that jingle. Call 833-JOIN-PMC. We'll have a commercial for that soon. But with that being said, folks, I know we're 15 minutes over, and I just wanted to thank all of you. Thank all of you for being on, and hopefully we'll see a bunch of you in Private Money Club. Stephen, anything you want to close up with? I love it. I love it. I love it. See you guys in there. Friend me when you join. Let's get some conversation started.
All righty. Thanks, everybody. We'll talk to you soon. All right, so I hope you guys enjoyed that episode. We're putting up tons of them, but I think if you like this one, you'll probably like that video as well. Not only that, I've got a book that I created, Mapping Out the Millionaire Mystery, where we actually show you what the wealthy do in the game they play with money. I want you to have that for free. And if you want to know about all my new videos coming up, click that alert button. Actually, smash that alert button, and you'll be notified every time we put a new video. So we'll see you on the next episode.